Hey everybody, Brian Mittman. Today I want to talk about taxes, injuries, and construction work. What do they all have to do with one another? Well, as you know, every April 15th your taxes are due. The IRS comes knocking at the door and says, hey, file your taxes. Sometimes you might get a refund, sometimes you might owe some money, and sometimes if you don't pay, you might have some issues. So, how does that affect you as a construction worker and your family? First things first, if you're a W-2 employee, that is, you're on the payroll and you're not an independent contractor, you're going to get a notice at the end of the year called a W-2 that you put with your taxes and you file, and hopefully your tax accountant or your tax preparer can help you find ways to get a refund for all the money that was taken out of your paycheck throughout the year. If you have your own business or you're working as an independent contractor, you're going to get what's known as a 1099. This form will tell you all the money you receive from a person who is paying you. You're not an employee, but you're actually a independent contractor, and then you have the opportunity to file your tax returns and have your tax preparer put a whole bunch of expenses in there, make deductions, and lower your tax amount. However, how does this affect you as a construction worker who has been injured on the job? In general, in most states, and particularly in New York, workers' compensation is not taxable. So if you got injured during the year, and let's say you got benefits for 6 months, workers' compensation paid you 6 months of lost wages, you do not pay taxes on those 6 months of benefits that you got from workers' compensation. There's also a really interesting little twist. Sometimes employers will reimburse you or pay you while you are out of work. Then the employer actually gets money from the workers' compensation insurance company. That is actually a credit that the employer has to give you and can be a credit on your taxes. So what I mean basically is if you got $100 of payroll, then the employer gets $100 from the insurance company. It's like you never got paid by the employer. So why should you pay taxes on that? It's a very interesting situation and something you should pay attention to. And finally, if you have been out of work long enough because of your injuries or your illness or disease, then you might get Social Security disability insurance. Social Security disability does have a tax tied to it, and you will get a 1099 form that you have to give to your tax preparer. It's not the normal payroll tax, but there is some money there. And there's one last kind of hidden twist. If you're getting both workers' compensation and Social Security disability, and there's what's called an offset, that means Social Security was lowered because of your workers' comp payments, there still might be a tax even though workers' compensation is normally not taxable. So there are a lot of issues going on if you have been injured on the job, if you have missed time from work because of a construction-related accident, or even if you're just working away and you're getting paid in a certain way by your employer. So be sure to consult with a tax professional. If you have any questions on the legal side, give us a shout out. Thank you, and make sure you file your taxes.